Hey, you're listening to Home Buying Uncensored, and I'm Brian Dent.
And I'm Mona Wong. This is the show for you. I mean, only if you want to know the truth about home buying. Can you handle the truth? This is where we talk about real life horror stories so you can save yourself. And I promise you will laugh and remember these stories. Hey, Brian.
Hey, Mona.
What's good today?
I think we're going to talk about some FHA loans today.
The Fahaz. I have such a love hate relationship with them. I don't know how you feel about them.
I think for the right client, they're the right loan. But I think the trouble that most people get into with their loan offices, because they're easier to do in so many ways, that loan offices will just throw them into an FHA loan, even though their credit's fine and they've got enough for a down payment. They're just not looking at all the options.
Yeah, so let's talk about that because I think people hear, oh, you only have to put down 3.5% and not realize that, yes, the minimum is 3.5%, but you actually have to be able to qualify for that mortgage payment. So it's more than just, oh, you only need 3.5%. So let's talk about FHA today. Why do you love it?
Well, if somebody's got decent credit, but less than perfect credit, I can get them into a loan with that little of down payment. Sometimes it makes more sense because they are not having to put more money down, and they can do like a credit score under 650 fairly easily and still get a decent interest rate. The downfall of that is they're looking at the mortgage insurance, what we call on the conventional side PMI. As long as the loan is intact, you can never get rid of it. So that's the biggest disadvantage, I think, of FHA. Otherwise, it's a good product.
I love it because, yes, it's more forgivable in terms of your credit score. I love it because it does allow a lower down payment, right? So you don't have to put down that infamous 20%. You can do 3.5%. And fun fact, did you know? I have tons of fun facts. I don't know if you know this.
I do.
Fun fact is you could actually buy a multifamily with 3.5% down. Now, of course, that means you still have to qualify for the loan, but no other product is going to let you do 3.5% down on a two, three, or four family,
Correct.
right? Like the cousin that you hate could actually live in the same house with you and you can charge them rent.
You charge them more rent.
You can charge them, right? I would put them on the crappiest floor and then charge them the most rent,
I would.
right?
Yeah. And
Uh,
still don't have to invite them over for Christmas.
right. That would be funny. No, no, there's nobody here. And they live right upstairs.
Come back later. We're doing the dishes.
Yeah. So you could do 3.5% down, and the interest rate is forgivable. And when I say forgivable, I mean most conventional loans, if you have a lower credit score, your interest rate's going to be higher. But with FHA, it's actually lower.
The rate's generally lower, and another thing is they allow the debt to income ratio to go over 50% in most cases.
Right. So what that means is how much money you make versus how much money you're paying every month. This is great for first time buyers, or even like if you're not a first time buyer, you don't have to be a first time buyer to be an FHA borrower, but those who are just fresh out of school and have school loans, or even parents that had to take on parent loans for their kids to go to school.
Yeah.
So I think that's great for that purpose too.
I love FHA, especially on a 2 unit home, because
Yeah.
the 3 and 4 units, you become more of a landlord. And there are some additional guidelines that go along with 3 and 4 units. But for a 2 unit home, it's great for a first time home buyer. So let's say you're borrowing $500,000, but half of your mortgage payment is probably going to be paid by the rent.
Right.
And also, having owned a multifamily before in a 2 unit building, you get to pick and choose your tenants a little bit better, and people
Yeah.
that are reliable. We had family in there for a while. We had some really good tenants, but most of the time we didn't have any issues. When you start getting up to the 3 and 4, you've got more maintenance issues, and
Right.
you just become more of a landlord.
You're more of a
And
landlord.
as a first time home buyer, I don't know if that's the wisest move, but
Right.
it
Start small.
starts small. But it does allow you to get into a property. And after a year in the FHA loan, if you want to go out and buy a single family home
Yep.
and
Rent out both sides.
rent up both sides, and now you have
Yeah. You have a
another
stream of income
in another
and you
property.
have a property that's building equity. So that's all good stuff. Now, There are things that I do dislike about FHA. One is that the PMI, the private mortgage insurance, is mandatory.
Right.
So somebody may have like crappy credit,
Yeah.
but you're putting down less than 20%, so you have PMI. And so in that situation, depending on how crappy your credit is,
Yeah.
like the crappier the better, right, for FHA.
Right.
Your PMI payment could be lower with an FHA loan than if you were going through conventional, but you do have the down payment.
Yeah.
And so with FHA, even though you have at least 20%, you still have to pay PMI.
Correct.
The other thing I don't like about it is that PMI is not, you can't cancel it with an FHA loan.
No.
You're forced to have to refinance.
Yeah.
Which you probably would anyways.
Correct.
It's just a matter of nobody likes to be told what you have to do.
No. No. No.
Right. It's kind of like going on a diet. If somebody said to me, you cannot eat Doritos, you can bet your ass that I'm going to want a bag of Doritos every day. Notice I didn't say a couple.
Well, you can't just eat one. That's
No, you
impossible.
can't. That is impossible. I do love Doritos. So then maybe that's a bad example. So okay, so let's say hot dogs. I'm not a big fan of hot dogs, but if you told me that I am not allowed to eat them, I'm going to want one. I'm going to put it out there. So if you guys want to send me a gift, do not send me hot dogs.
The thing with FHA that's not a great thing is they have what's called a mortgage insurance premium, and then they have a upfront mortgage insurance premium, and that is financed into the loan. But it's one, say, what is it, 1 3/4
It's
today?
1.75% of your loan amount that's added onto the loan, and that is what the government charges you
Yeah.
for using the loan. Because remember, it's a great product, it's a government backed product, and we live in the USA and nothing is free. So the government is going to get what
And it
they
goes
want
into a
from it.
pool, so to offset people that are being foreclosed on.
Foreclosed on. I mean, typically these are people who are higher risk borrowers. So I get that. And depending on your situation, even though you have to pay the 1.75%, it might still be a better deal for you.
Well, I think as a first-time home buyer, any home buyer, when you're sitting with a loan officer, when my clients sit with me and they're a first-time home buyer, I will run the numbers both ways. So if they have a really high credit score and they don't have a large down payment,
Yeah.
you can look at programs with 3% down on the conventional side as
Right.
well. That may be better. Any credit score over 700, I think you're going to be better
Yeah, you
in a
definitely
conventional loan than an
need
FHA
to
loan.
you need to check.
But like anything else in the mortgage world, there's some people out there that just abuse the product, whether they're making more money or whatever the deal is.
Right.
They're just not looking at the benefit of the client up front.
Right. So whoever you work with, you need to see what options you have.
Yeah.
Sometimes you don't have a lot of options. Sometimes there's only one way for you to go, but you need to make sure that the options have been checked at least so that you know that there's no other way to go. That's going to be my biggest advice for everybody, right?
Yeah. Well, generally, if you think if the credit score is under 680, you definitely should be looking at FHA
Right.
with a
100%.
low down payment.
Yep. And if you're looking at multifamily with a low down payment, that's also a really great place to look.
Correct.
Right. I think that's going to be my spiel for FHA today. Don't
Yeah.
shy away from it, but also don't jump into it without knowing what all your options
Yeah.
are.
If your loan officer comes out of the gate and just says, got to go FHA,
Ask why.
yeah, why your antenna should go up and you should ask why. And,
Know your options.
if you know your credit score is over 700 and there's programs out there, whether they're through the state agencies or private, you can sometimes do better. So
Right.
you got to really consider everything if your credit score is over 680.
It's like when you're crossing the street, you got to look both ways.
Yeah, well,
Does that make sense?
yeah,
Okay.
yeah.
Perfect. All right, guys. Well, come back again. We'd love to talk to you some more.
All right, thank you.
Hey, thanks for listening to our podcast. We really enjoyed having you here. If you have any questions, drop us a note. Let us know. You can get us at hello@homebuyinguncensored.com. You can also reach us on Instagram. Our handle is homebuying_uncensored. Thanks.